All right, so this is my trade recap for the week ending February 5th. So I was able to close 16 trades. I had a net profit for the week of $12.49 US. Commissions for the week was $191. So gross profit actually was $14.41. I'm actually pretty happy with this week. I think it's one of my best weeks. I felt comfortable, I felt confident, and everything was going well. Obviously, it did help that Monday and Tuesday we rallied, and then even the rest of the week was pretty green. Could have been a different story if it was a red week for sure. So let me go through the trades one by one. So first of all, I've got Peloton here, which is a naked put, which I opened January 26th, but I closed February 2nd. So let's look at the chart here so we can follow. So January 26th is right here. So this is a day where Peloton dropped. It was at 159, 157, and it dropped all the way down to 150, even 147. So on that day, I sold a naked put at a 125 strike. So it's pretty far. So from 150 to 125 is almost 25 points away. And I collected $2.43 for that. I went to the February 12th expiry, but I closed it February 2nd for $1.60. And the reason I closed it early, you see, if we go to the chart here, I closed it on February 2nd when it was trading at around the same price. So the only thing that allowed me to close it is just time passing by. The reason I closed it is at some point this put option was worth for almost $5. So I was down a lot on this put at some point when volatility in the general market increased because of GameStop and AMC. So when I got the chance to get out for a profit, so I still got a $71 net profit out of it. So an 83-cent profit per contract, total P&L 83, but commissions 11. So left with net profit $71. I got out because I had several scenarios where the put option was worth almost $4. Now, how much buying power, how much capital was required to place this trade? So I'm going to use my buying power spreadsheet here. So Peloton is a 30% margin requirement stock. So the stock was market price. The stock was trading at around, let's say, 145, and I had the 125 strike, and I had one contract. So the capital required for this trade was $2,350 to place this trade. But obviously the risk with a naked put is as the stock drops, my buying power or the capital required to place the trade increases. So let's say it drops to 125, the capital required would go up to $37.50. But I got out of it before any of that happened, and $71 net profit. Next trade here was an Adobe put spread. So this is a very old trade that I kept rolling. I think I rolled once, and I got out of it as soon as I could when I saw a small profit, because it was breached several times. My 465, even my 460 strike, they were breached several times. I think Adobe was trading in the 450s at some point. And obviously for me to win on this trade, Adobe needs to be trading above 465 come February 19. I didn't want to take the risk. This was an earnings trade that I didn't like, so I rolled it to give myself more time. And at least I got out of it with a small profit of $28. So I'm okay with that. As you can see, I've had the trade for 55 days. That's a bit too much. While Peloton was only 7-day trade. I have Square here, January 26th. This was a put spread. I sold it January 26th. So if we look at the chart, so if we look up Square, January 26th is probably at this dip here, as you can see. So I like selling on red day. So I didn't catch the best dip because January 27 was the lowest price. But I sold it January 26th. So I sold a put spread on Square January 26th when it was trading at around $210. And I sold which strikes here? I sold 190, 185 for February 19. So I just need Square to stay above 190 by February 19, and I keep this $1 or $100. I ended up closing it February 2nd. So let's look at the chart February 2nd. What happened? Well, first of all, Square went up, and then time passed by, and then February 2nd, Square was trading at 227. So from 210 to 227, and some time passing by, I was able to close this trade for 37 cents. So from $1 to 37, I'm left with 63 cents profit times one contract, so times 100, so that's $50 of net profit, because I had almost $13 of commissions. And then January 26th as well, I did a naked put 2 contracts on LGVW, 17.5 strike. I collected $1.60 and I closed it for $1.15. I definitely closed it too early because the next day I think I could have closed it for 80 cents or something. So I closed it too early. I tend to do that with my trades. But yeah, I closed it too early, but I still got a profit of $77 net profit because it was 2 contracts. So January 26th to February 1st. So let's look at the chart for LGVW. So January 26th, I said, January 26th to February 1st. So you see right now it's already after hours at $22. After hours, it's up 11%. Ridiculous. All right, so January 26th, looks like I opened everything January 26th, yeah. So January 26th, it was trading at $19. And then February 2nd, it was trading at around the same thing, actually. So the only difference is time went by. And yeah, that's it for this trade. And then Netflix, I sold on January 27. So let's look at Netflix chart January 27. Obviously, it must have been a down day or else I wouldn't have sold. So this over here is earnings. I sold January 27. So I sold right here. So you see one of the big down days for the market. So I sold a Netflix put spread at which strikes. I sold the 490, 485. While Netflix was trading at, I think, 530. Yeah, so it dropped all the way down to 522. I sold the 490, 485. For which expiry? I sold for February 19 expiry. So basically, I just need Netflix to stay above 490 by February 19 for me to keep this $1. I ended up closing it February 2nd. So it looks like I closed a lot of trades February 2nd. I closed it for 37 cents. So that gave me a profit of $50 as well, net profit of $50. And then next year, January 28, Fubo, naked put at a 30 strike, collected $2.75. So let's go to the chart here for Fubo, January 28, FUBO, Fubo TV, January 28. So it must have been a down day. Actually, it wasn't. Well, yeah, it was. Compared to the previous day, it was a down day, but compared to the overall chart, it's still pretty high. So Fubo before was trading at 54 on January 27, but January 28, it dropped to 46. So I sold a put at a 30 strike, right here, 30 strike for February 19 expiry, collected $2.75. And then February 1st, I was able to close it for $1.25. So let's go to the chart to see what happened February 1st. So February 1st, it went up a bit. Went up to 48 and a bit of time passed by. And that's the thing with naked options is that they decay fast. So that's why I was able to close it in only 4 days. So days in the trade, 4 days from 275 to 125, made $138 on that trade. Net profit US. So pretty good trade. I really like Fubo. All right, and then I've got another naked put here. So this week, as you can see, they're mostly naked puts. So on open, January 27, let's see what happened. January 27th, Opendoor basically. So January 27, the stock dropped. It was trading at around 25. And when did I close it? I closed it February 2nd. So yeah, I closed many things on February 2nd, I guess when the general market went up. So February 2nd was trading at around $28. So from 25 to 28, that allowed, and I had the March 19 expiry. So it was really, the expiry was really far. I was in the trade for only 6 days, collected $2.40. I was able to close it for $1.45. So that's a net profit of $83 in 6 days. I didn't have to wait till March 19 expiry. I had the 22 strike, so I was still pretty safe. And then January 26th, again, Fiverr put spread 185, 180. So let's look at the chart for Fiverr, FVRR. January 26th, wow, 274. Could have kept it. Anyways, January 26th, Fiverr's trading at around 222. I sold the 185, 180, collected $1.05 for the February 19 expiry, and I closed it February 3rd. So February 3rd, it was trading at 237. Now look at this. If I had held on to it, this is probably worth pennies right now. It's probably worth 5 cents or even less. It's trading at 274. So once again, I tend to close my trades too early. Could have made more profit on that trade for sure. I closed it for 44 cents. So yeah, not my best trade for sure. I made a profit of $48 net profit. So gross $61 with commissions of $12. I'm left with net profit of 48. I'm gonna remove the P&L here, total P&L and commissions, just to make the spreadsheet larger, so it's easier to see. Yeah, this is better. All right, so January 28th, a naked put on Corsair at a 35 strike. Oh, this is a good one. Collected $4 for February 19 expiry. I'm sure it's worth much less. Once again, I closed too early. Whatever. So close for $2.65. I'm left with $123. Now let's look at the chart here. So from January 28th to February 3rd. So Corsair, January 28th to February 3rd. So Corsair, January 28th. I definitely didn't sell here, but I sold it over here. So on this big drop here, I sold a naked put at a 35 strike, did I say? Or was it 30? Corsair 35 strike. Yeah, so I was only 3 points out of the money. And then on February 2nd, I said, or February 3rd? February 3rd, yeah. So February 3rd, I closed the trade, which is right here. As you can see, the stock jumped back up again. So that allowed me to close the trade and only held. I was in the trade for about 6 days, and I made a net profit of $123. And it's definitely right now, I think it's probably worth $1 right now or something. So I could have made way more. Anyways, January 29th, Laser or LAZR. It's actually Luminar. So let's look at the chart. LAZR, Luminar Technologies. So I said January 29th, I think it was a Friday. So 28, 29 right here. So you see 29 at this point here when it was trading at 32.19. I sold the 30 put, collecting $2.95 for the February 19 expiry. And then February 3rd, I closed it for $2. Now, if we look at the chart, February 3rd, the stock was trading at the same thing actually, even a little bit less. But because time went by, the option decayed quickly, and I was able to close it for it wasn't even 50%. So I sold for $2.95. I bought back for $2, but gave me a profit of $83 net profit after commissions. February 2nd, and again another Fubo naked put at a 30 strike, this time for $3.30. So what happened February 2nd on Fubo? Let's go back to the Fubo chart. FUBO. February 2nd. So the stock dropped a little bit, not that much, from 50 to 48. But volatility on the stock went up for some reason. So I sold the 30 strike. I went to March 19. That's why. So I was able to collect $3.30 because I went to the further expiry. And I actually closed it 2 days later, February 4th. 2 days later, I closed it for $2.13. Giving me $105 net profit. So if we look at the chart, February 4th, Fubo. So it went back up to 52. So it had dropped from 52 to 48. And then when it went back up to 52, I was able to close the trade. Didn't have to wait all the way to March 19. It's not 50%, but I mean, $100 is not bad. I'm happy with that, if in 2 days especially. And then I've got a naked put on HIMS February 2nd to, I closed it February 4th. So 2 days again, a 2-day trade. 17.5 strike. I collected $2.55 and I closed it for $1.60, for giving me an $83 net profit. And I think HIMS actually flew even more. If I kept it, I could have closed it for much less. So I went in February 2nd and I closed February 4th, right? HIMS, yeah. Open February 2nd, close February 4th. So February 2nd is over here. So it drops from the previous day. And it actually dropped some more. And then February 4th, it just came back up again. So there you go. And now that's how I was able to close it for $1.60, $83 net profit. And now this trade here, this one was probably my scariest trade of the week. If you saw my portfolio update, I think on Wednesday or 2 days ago, I talk about this trade. I ended up closing it. So Spotify after earnings, here, let's look at the chart. February 3rd for Spotify. So I actually wanted to play Spotify before earnings, but I got scared. I didn't. And actually, I think it was a good thing that I didn't. Okay, so let's look at the chart. So February 2nd, was it February 2nd or February 3rd? Yeah, February 3rd, okay. So February 3rd, so you could see the big drop right over here, right? You could see it. So February 2nd, Spotify is trading at 347. And then after earnings is announced, the stock drops all the way down to 312. So on that day, because of the drop, I decided to sell a naked put at a 270 strike. March 19 expiry, I collected $6.50. But then the next day, Spotify went up just a little bit. I decided, I don't think this is the right approach, but I closed it the next day for $5.40. I decided to take the profit quickly for the week. Made $98 profit on that trade, net profit. The reason I closed it early is because I said to myself, I was going to do the earnings trade before earnings was announced. I was going to sell the 300 put, and actually it closed at 310. So the 300 put would have been a winner. I was going to collect $1 from the 300 put before earnings. But right after earnings, when the stock dropped, that put was worth $3. So it would have been stressful to hold after earnings. But at least I made that $100 that I wanted to make initially when I wanted to sell that put on Spotify before earnings. But at least I did it after earnings. So it was actually a little bit safer because I did it after the reaction. And because the stock dropped, it allowed me to enter the trade on the put side. And I went to March 19. So I could have held it actually. And held it to March 19 and just wait until I can close it for 50% until I can make maybe $300 from the trade. So yeah, I closed it. And here, this is my favorite trade of the week. That's why I like earnings. It's so much fun. So this is February 4th. So this is from open Thursday, closed Friday. So this is a 1-day trade. I sold the naked put on Snap at a 50 strike. It was trading at 58 before earnings. And then right after earnings, it actually dropped to 52 after earnings. But it opened on Friday. It went all the way to $60. So I was able to close it for 10 cents. So from $1 to 10 cents in 1 day, giving me a $78 profit. And I could have actually let it expire worthless. I put an order before the market opened and it got filled when the market opened. But if I was watching, so because I work full time, of course, I don't watch the market all day. So I try to put my orders so that they execute on their own. So, but if I were watching, I would have seen it at 60. 10 points away, I probably would have left it to expire worthless and I would have saved $10 and commissions on closing it. And profit would have been around $94 instead of $78. But can't complain. I mean, it's still profit. Profit is profit. So let's look at the Snap chart here. So it was February 4th, and then it dropped a little bit in February 5th, but then it closed at $63, so 64 even after hours. So I definitely paid for nothing. I've definitely paid to close it for nothing. All right, and then finally, Curry, a naked put on Curiosity Stream at a 15 strike. I actually forgot to mention the capital required for each trade. So I'm going to go back to mention the capital required for each of these trades. So Curiosity Stream, February 3rd, opened the 15 strike, sold the 15 put for $2.10. I was able to close it for $1.10 2 days later, giving me a $78 net profit. So let's look at the Curry chart here. It actually dropped hard and then it bounced back up. It's, I don't know, it's weird stock, but whatever, can't complain. I was just selling volatility and anything that drops. So February 2nd, as you can see, it dropped over here. And then a few days later, it went back up. And that's why I was able to close it so quickly. Could have held it longer. I had the March 19 expiry. I definitely don't want to wait all the way to March. But if I can make 50% of the profit in 2 days, instead of waiting 45 days to make 100%, then it makes more sense to close it. So yeah, so that's how I got my total profit of $12.49 for the week. So it's small profits, but they add up, as you can see. And what else did I want to show you? Oh yeah, so the P&L, it's pretty good actually. For February, it's just the first week, got a total P&L for February of $12.49, while January I had $31.62. And December was $25.23. Now, I don't expect to make this amount every week. It would be great if I could, but this week was a good week because the market just rallied for some reason. But if I can make 500 a week, I'll be happy. But this is definitely a good week, a good start to February. Hopefully nothing crazy happens. We'll see. And these are my remaining trades, actually. I'm going to go back and talk about the capital required per trade. So Peloton, I had mentioned, it's about a little bit less than 3,000. Adobe was a put spread, so it's the capital required is the width of the spread minus the credit that I collect. So it's about $500 just to round it up here. So this one's about 3,000. This one's about 500. This is a put spread, so it's another 500. So 3,000, 3,500, 4,000. So I'm just adding it up. This is a naked put. It's about, let's say, $1,000. So I'm up to 5,000. This is Netflix put spread is another 500, so 5,500. Nvidia is another put spread, so 6,000 total. Fubo probably took about $900 or even less actually. So let's just say 7,000. Open probably $500, so 7,500. Fiverr is a put spread, so $500 of capital required. So let's say a total 8,000 now. Corsair, see Corsair, this is interesting. Let me show you Corsair. So Corsair was a 30% margin requirement stock. So when the stock was trading at 38 and I sold the 30 put, the capital required was $340. But Questrade changed the margin requirement on the stock. For some reason, I guess they considered it risky. They changed it to I actually sold the 35 strike, sorry. They actually changed it to 50%. So let me just put it back to 30. So when I initially did the trade, the capital required for this trade was $840. But then Questrade changed it to 50%. So now all of a sudden the capital required is $1,600. But I think I got out of the trade before the margin requirement changed on the stock. So yeah, so this one took about $800 of capital required. This one took about $1,500. Fubo took about another, let's say 1,000, a little bit less than 1,000. Hims took about maybe 800. Spotify, oh, this one took a lot. So this one here, the stock was trading at around 312 and I sold it 270. So Spotify is a 30% margin requirement stock. The stock was trading at around 312. I sold it 270. So that means it took $5,000 of capital required. So this was a lot. And that's why I didn't want to keep it too long either. It stressed me out a bit. Although I felt like 270 was safe for March 19. So yeah, this one took $5,000 of capital, but I closed it the next day. So it's released. The capital is released already. Snapchat, I had the 50 strike and the stock was trading at 58. So that one took very little. That one took $940 of capital to place the trade. And finally, Curry took probably maybe $700 of capital. So in total, I didn't keep track, but it's probably around maybe 15,000 for the week. for all these trades. Plus, they're not all held together. They're not all open at the same time. Some of them are closed before the next one is open. So, for example, this one is closed February 1st, but this one's open February 2nd. So, at a given moment, I think I use about $10,000 of capital at the same time. But yeah, never all at the same time, because sometimes you end up closing trades. So yeah, so what I'm left with now is this here. So I've got this BABA put spread that I just want to expire worthless. It was a put spread that I was rolling. So yeah, this one doesn't count. I just wanted to expire worthless. I've got covered calls. This is in my RSP. So covered call on Box, Corsair, and Stick. And then I've got another naked put on Curry at a 17.5 strike. So it's a higher strike. I've got a naked put on APXT, and I went back in on Spotify today, February 1st. So remember, I opened the trade February 3rd, I closed February 4th, and then February 5th, I went in again because Spotify dropped again today. So let's look at the Spotify chart, SPOT. So yeah, February 5th, see, it dropped again to 307 even. So I had an exaggerated order in. So remember, I had the 270 put. This time I went for the 260 put. So I went lower, making the trade safer. And instead of asking for 650 on the 270, I decided to ask $5 on the 260. So I went further, 10 points lower, and I still asked for $5, and I got the $5. So now, but this trade is open. It's not closed yet. So right now I collected $500 from this, but I still have to buy back the trade and close it. I think it's showing like a $20 profit right now. And I also did a Unity put spread at a 105-100 strike, collected 99 cents for the March 19 expiry. So let's look at Unity chart. This stock dropped hard after earnings. It dropped 14% after earnings, as you could see here. That's pretty bad. Right here, you see this beautiful drop here? So on this, I entered a put spread at 105-100 for March 19. So pretty safe. And if it gets tested or breached, I'm just going to turn it into a naked put, because it's actually a 30% margin requirement stock. So it's not going to take much capital out of me. So right now, this is taking 500. This is taking 1,800. This is taking about 3,000. This is taking about 1,500, let's say. I'm just rounding. I'm not giving you the exact numbers, but it's pretty close. And Curry here is taking about 50% of 1,700 is about, I don't know, $900. This one's taking about $750. This one here, so let's look at Spotify. I like using the calculator. So 260, and the stock is trading at 312, I think. So stock is trading at 312. I sold the 260. So right now this one's taking $4,000 of capital. But once again, like I always say, if the stock drops, that's the risky part, is my capital goes up. Capital required on the trade goes up. If it drops to 280, let's say, then it's taking 6,400 of capital. So I have to make sure that I have enough capital in case the stock drops to my strike. So if it drops to 260, it's using $7,800 of capital. Do I have enough capital to hold the trade to 260? So 7,800 I could do, but it is a lot. It does represent a lot of my maintenance excess. So it's going to be bad. I'm going to have to roll the trade, of course, and I'm going to try to roll the strike lower so that it takes up less capital. But that's if it drops to 260. Hopefully it stays flat or even goes up, and I can actually close the trade. This one here, I can close it for, I don't know, $3.50 maybe I'll take, or even $3. So that's the plan. Hopefully things go as planned. So yeah, so these were my trades for the week, and these are currently my open trades. Now, I did start my WhatsApp group with my trade alerts live, but I didn't make a video yet explaining everything on the trade alerts. So I'm going to do that soon, just to say what kind of trades I'll be sending out, who's it for, what you should expect, how to set up your account so you can trade the same way, how much capital is required, and so on. So for now, if you have any questions, leave in the comment section below. If you want to send me an email, look at the description below the video. I leave my contact info. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.